Moving over to the markets now, we were joined by Mike Briggs of Briggs Feed Yard to discuss the cattle markets. Earlier this week, the U.S. Department of Agriculture reported that the select box beef cutout value was actually higher than choice. The inversion may indicate some price resistance for higher-end cuts of beef. That's where we began the conversation with Mike. Well, let's talk about some of the latest activity in the cattle market. One of the big things a lot of people are watching has to do with the spread between choice and select. What's going on in there?
You know, I've seen the choice select spread go to even several times over my career. I've never seen this. I don't have a good explanation to it. I haven't talked to anybody that has a good explanation for it. I think it basically goes back to simple demand and supply. We've got a lot of choice product. Cattle are grading really well, have been for 2 or 3 years, and we've kind of saturated that market. And you've got another market that buys select as a rule. So I think the choice guys have just got enough product right now. It's also the time of year, and we always have to remember this. It's still January, it's still February. Those are the poorest demand months of the year. We're turning over into March here pretty quick. It's going to warm up eventually, and you're going to see the grills come out of the garage. And then I think that choice product thing goes back up. I think this is a really short-term deal. It might happen for 2 or 3 weeks. I don't think it stays this way, but it is very curious.
You mentioned not a great time for demand, but prices have been steadily going up here in the cattle markets. Give us your general take. What are the bulls and bears in this market?
The bears, very simply, is the amount of cattle on feed. We've had huge placements because of drought, which we're going to talk about later. Have huge placements. Feed yards are full. I am clear full of cattle. I have the most curious situation, and I've had it for 6-8 weeks now. I have a full feed yard, and I have nothing for sale. It's bizarre, and there's a lot of feed yards that are full with people waiting to get in. And so you've got this large supply of cattle looming over the market. So that's going to keep a little bit of a lid on it. But once again, we're coming into the time of year where our biggest beef demand is in front of us. So, and market ready cattle, there's not that many of them. So I'm really friendly the market right here. Now, the curious situation is going to be, here's what's happening. And this is where people get upside down a little bit. So we've seen the board rally like we typically do. Well, typically that rally ends here, the end of January, February. And you have to remember, everybody's looking at April cattle, which is at that huge premium, like 146, 147 and change. And they're thinking, oh boy, they're getting all geared up. That's telling you what beef is going to be at the end of April, not what it is now. So that's kind of a problem for the guys like me that are hedged. Cash is down here, board's up here. That's a terrible basis. But what you see this time of year is the board peaks and cash starts to go like this. Well, then you get that cash above the board. That's where guys like me are really happy because you're getting money added on, where the guy that saw the board go, how come the board's going down and I'm not making any money? Well, that's why you got to hedge. But that's the situation you see, is the board peaks out and starts to head down, because the board is a futures market, so it's looking way into the future all the time. So you always have that big slob of cattle in May and June, and so the market sees that. So you start to get some of this, but this cash is going to keep working higher here till the middle of April probably. Typically that's what it does, so I would say it's going to be fairly typical in that fashion.
Need to give you a compliment this month on Market Journal, Mike. Last month when we talked to you, you were right about the corn market. We were talking about whether it would stay around $6. Well, it's definitely surpassed that. How close are you watching the grain markets in relation to having to feed cattle? And is that a big concern right now?
You have to. That's your biggest variable besides weather, but you can control this variable. So when you buy cattle, you need to lock your corn in because that's your biggest variable that you can control. So that's really important, and I think this corn thing is going to stay this way for quite a while. If you've looked at the 90-day and even the entire summer forecast, it does not bode well for those of us in the Midwest. It looks dry. So you've had a drought and a poor crop in South America. You've got conflict going on in Ukraine, which is your number 3 corn supplier. If the Black Sea gets blocked off, the only game in town is the United States of America. So you're going to see a lot of demand come after our corn. That's going to put a lot of pressure on the Northern Hemisphere to raise a crop. And it's going to put a lot of pressure to grow a lot of acres of corn. And the farmer's looking at $16 beans. So it's like, well, I don't know, maybe I don't need to plant any corn. So corn's got to fight that and keep moving up towards beans to narrow that gap to buy acres. Okay, next thing, is it ever going to rain? You know, I'm one of the guys that smarts off all the time and says, don't worry about a dry winter. It rains the second week of April, it'll all be fine. Look at the forecast, that's a little iffy. And it's really frightening. And the other thing about that is if you keep continuing drought, not only does it make your corn price go up, feeders and cows are going to have to get moved off grass because there's no feed. And it's potentially really serious, this market, and it really concerns me because I don't want to see ranchers go out of business. I don't want to see ranchers struggle, but man, they're staring right down the barrel of a big gun right now.
Final word is yours this week, Mike. We've talked about when you buy cattle, you got to buy your corn as well. And last time you told us, don't be a drunken sailor out there buying cattle. What else would you like to leave us with?
You know, I think that situation continues. I think you need to give yourself some room on marketing. That doesn't mean don't do any risk management. It means be thoughtful about how you do it. I'm still a fan of buying puts and selling calls and setting yourself up a fence because you don't really know what the long-term implications are, what's going on in the Black Sea right now with Russia. And there's so many variables out there. I think Guy still has to watch what he's doing. But I'm pretty friendly to the cattle market here for another 60, 70 days.